So do I do the intro off camera?
I think you do.
What's going on, everybody? Welcome back to another episode of Man and Machine here. Episode 161, joined by Mark Phillips of Harvested Financial, our fantastic partner, joining us today to give a recap on the last month and do a ton of other stuff with us. I am currently ghosting you live. Can't figure out my camera. Just went down out of nowhere. We'll see if I can get it back. But anyway, got a great show for us today. While I'm the host, the faceless host here, Mark, what was the best thing you ate over the weekend, please, before we get into it and as everybody joins here? Any highlights?
Nothing like completely out of band, but I did have a really good burger on Sunday.
Ooh, all right.
I usually go to, and I have not had their burger before, and was just, basic cheddar, lettuce and tomato, nothing fancy, but well done. There's a lot of beauty in that simplicity.
Now, not cooked well done, right? That would be.
Ooh, no.
Okay,
No.
I knew that, but you kind of set yourself up to where I got a little nervous. Okay, very cool. Now, was this a smash burger, or are you like a juicy burger?
I typically am partial to smash burgers. This was more of the traditional, 3/4 inch thick patty.
Nice. All right, very cool.
Getting me hungry just thinking about it again.
You're not kidding. I'm gonna flip you guys into this mode. How do we feel about that? How do we feel?
Oh, all up in our face. That's fine.
I think it looks good though, until I can figure my thing out. But anyway, I'm gonna stop talking because I'm not on camera. What do we got today, boys?
Well, we've got quite the agenda today. We've got stocks in real life, where we will talk about a stock that I've traded a lot in the past. Dillon, I don't know about you, but Boeing, ticker BA. I know a lot of fans of trading who trade Boeing. So we've got Boeing going on. We're going to dive deeper into Shorbo. We've got stop losses and take profits that we're going to talk about today in Shorbo. And then Mark's here. And you know what that means. Mark's here. We're going to review how things are going over at Harvested Financial. And I think that kind of wraps up the agenda. We'll take a look at this week's economic events to cap off the show. And I'm sure we will take this pretty close to the bell. I'm going to try to give ourselves about 20 minutes before the bell. So let's be efficient here, fellas. How's that sound? And Dillon, how's your camera coming along?
Not so hot. Don't know why, but I'm still testing some things. But I'm here. Consider me like I'll be the screen guy. I'll have charts up. We can look at Boeing and a million other things. So apologies. Don't know what's going on.
All right, cool. If you want to get that trading view chart pulled up for Boeing, I will get this added to the stage here.
Awesome.
So I thought I don't think this is their slogan at all. But when I saw this on the slide, I was like, I'm not going to fact check this and change it. I love it too much. So ticker BA, if it ain't Boeing, I ain't going. That is really funny. So Boeing, I've been hearing about Boeing in the world of trading for over a decade now. I think my dad is probably one of the biggest fanatics to trade Boeing. He just loves buying their dips and letting it rip up and sell. Like if there was one thing, if I had to tell my dad, you can only do one type of trade, one ticker for the rest of your life, it would be he's just trading Boeing all the time. Funny. Yeah.
What type of trade? Like buying and selling shares?
Yeah. Recently he's always telling me, he's like, Ben, as soon as Boeing dips below 150, buy it and then sell it when it goes above 200. Does it all the time. I'm just like, okay. And I haven't done it yet. Maybe do you have a chart up, Dillon? Maybe
I do. I was going to say, I hate to say it, looking at it, keeping it simple. So here's the last 5 years. We're looking at weekly charts now. All right. So this 150 line that your dad was talking about right here. All right. So yeah, I could see we could probably track your dad's purchases. All right.
Probably.
We see November, probably in April, last 2022, it dipped below. But yeah, Boeing is always, an interesting stock. Oh, lately over the last few years.
Where's $200? Can you draw that vertical
right here? So yeah,
it works. But those are the levels he's been talking about lately. They haven't obviously always been those levels.
Yeah. So Mark, tell us, Boeing, were you ever active on this stock? And if so, tell us more.
No, I don't have nearly the expertise that Ben's dad does. So I've flown on their planes, but not spent much time trading the stock. No.
Okay. So when we're looking at this here, we were talking about forming a trade idea, which I'd like to do. Let's talk about personal experiences really quick. Boeing is the one that had a ton of trouble, right? Doors falling off planes. Yeah, exactly. That's a great slogan there from Doug. And if he pulled that together himself, it's pretty impressive. If you found it online, still great curation. So I don't know when I'm flying on a Boeing, do you guys? But there's only a couple big ones. There's Boeing, there's Airbus, and one or two other big ones that are most of the commercial airliners, I believe.
Embraer? Is that
what is it?
The Embraer?
Oh, okay. You're probably right. I don't know.
I don't know.
I can look it up.
If I was on a flight and I heard the plane was an Embraer, I'd probably want to get off that plane. I don't know if I've heard
They're
that.
like a little they're for shuttles, like for shorter.
Oh, okay. Gotcha.
It's a Brazilian company.
All right.
Delta uses them quite a bit.
Nice.
Interesting. Very interesting.
All right. So
Fun facts trivia. How many airplanes do you think Boeing made last year, 2024?
Oh, geez. Hold on. I'll get the screen back up in a second. Man. Well, is this counting like government, like military? Aren't they? They're crazy. They got a crazy amount of military stuff going on, I think.
Yeah, I think that's also part of the reason why my dad loves trading Boeing, because they have so much government contracts. He's like, they're never going to go out of business.
Never going anywhere. Okay, I'm going to guess. How many planes last year that were made?
Yeah, the number I had. Okay, so it's commercial aircraft, it says. How many commercial aircraft?
My guess was really annoyingly high. Let me take that back. 1,000.
I didn't even hear what you said.
All right, good. 1,000 planes last year. Mark?
Yeah, I'm going to be off by an order of magnitude here. It's either like 35 or like 4,000.
348 commercial aircraft,
All right.
which was a big drop from 2023, where there was 528.
Oh, come on now. Got more people flying. All right. So look, our experiences with Boeing, sure, we've had them. We're alive, right? We haven't had nobody's had a door fly off their flight midair or anything.
The source I'm looking at actually cites that incident as one of the reasons why Boeing did not deliver as much in 2024.
I would imagine that to be true. All right. Well, good to know.
Well, and then there was the Max, what was it? The Max 737 that was a disaster a couple of years before that.
Oh, yeah. Yeah. Was the missing? No, that was, never mind. We're not going to talk about the
Malaysia flight, something.
Yeah. I don't know. I don't know if that was a Boeing or not. I'm not going to drag them into that.
Probably was.
So let's talk about a potential trade idea here. We still got your dad's levels marked on here. We can put that or not, but these are daily bars here. All right. So let's just look at year to date. All right. And I'll get this to fit the screen a little bit better. So we opened the year around $170. Okay. Dipped below, traded as low as what looks like maybe 130. And has been bullish since that big pullback in April. All right. Skied up to 217 pretty quickly in about 2 months there. That's crazy. Pulled back a little bit, and now we're seeing some consolidation, maybe call it between levels 220 and 240, kind of trading in that channel, if you will. Again, I'm just looking at this roughly here. But, we're going back to July. Beginning in July, kind of maybe trading in this channel. So I don't know. I'm almost like, I'd love to see what a condor's like between like 220, 240, honestly. I don't know what you guys are thinking looking at this, but
yeah, let's check out a condor.
All right. You got a chain up? You want me to pull one up?
I'm working on it. All right, get my screen up there. Now, are you thinking weekly?
I don't know. I mean, we can kick it out, but it's been in this range at least that I was looking at from again beginning of July, second week of July, trading above. It's been above 220. It's been above like 218 for coming on.
So maybe
3
we
months
sell
now.
the 217.5. And let's do a 5 wide. Yeah. There we go.
And then maybe the top of it. When are you expiring?
This week.
Maybe do the top of it at like, I don't know. What how often are the strikes here? Every 250.
Every 250.
What about like 237.5?
What's the high of the last 2 months?
High of the last 2 months was 239, so 240.
All right, so let's do 240 if we want to be super safe here.
All
So
right.
it's a 5 wide wings on a little over a $20 wide body. Send that to our ticket. Let's just see what we're looking at here. 90 cents credit mid. Probably
All
gets a little lower than that, but that's not terrible.
So what, you had 217.5 as the bottom, right?
Yep.
And then 240 at the top?
Yep.
All right. I don't want to sit here and say I don't love it, but I kind of love it. All right. So here's what it looks like if we have my screen still up.
Yep.
Okay.
Screen's up.
So, we've spent, again, since, the last 2 months in this range. So for $90, I might honestly give that some real thought. It's been trending down for the last 3 days, kind of getting close to the middle of the lane there. If those were our strikes for $90 expiring this Friday, I might have to take that.
Yeah, it doesn't look bad, honestly.
All right, I'm gonna throw my screen off. I'm gonna go maybe build that trade in my Tradier account and see if it fills.
I like that trade. I think maybe we'll send that trade out in the post-show recap video.
All right, cool. What else we got, fellas? And by the way, what else? Software that caused crashes. Yes. All right.
I mean,
Anything
for me,
else?
Boeing, that just about does it. Maybe we'll consider making a CC bot mirroring my dad's trades on Boeing.
Oh yeah, CC.
He claims he's never lost on Boeing.
Okay, well, we're gonna need some verified trades from his broker, and hopefully he'll comply. No, that's too funny. All right, I think that wraps it on Boeing. Mark, unless you had anything else, did you love or hate our Condor there? Just looking at it.
Neither necessarily.
All right.
I always find Condors difficult in single stocks. And I've been trying to think of like an options play that would replicate what Ben's dad's doing over there. The kind of swing trade style.
Anything?
I'm thinking almost like a modified. I think they call it a jelly roll, where you or not jelly roll, a slingshot. Sorry,
you got music on your mind.
The jelly roll is like an interest rate play. Slingshot is where you sell a put spread to buy a call. So I think about spreading that over time, selling some near-dated put spreads to finance kind of a long-term call on that.
I think where Boeing is at currently, my dad would say, "Don't buy. We're going to drop back down."
Right.
Oh yeah.
So maybe inverse that, sell a call spread bot to buy a put.
Sure. Yeah, you can play it the other way.
Yeah.
All right.
All right. Maybe we'll get that set up post show.
I have a good college buddy who works at Boeing. I'm gonna go look for some info. Just kidding. All right. That wraps it on Boeing. And what do we got next, guys?
Should we get into Shorbo, or Mark, do you want to do the monthly harvested review?
Either work. I mean, if we want to talk about Shorbo first, I mean, I can key off that too, because obviously that was a big factor in last month's activity.
Why don't we cover the recap and then we'll get into the show? Do you have anything that you want us to put on screen here?
I don't immediately know. But, For the past month, I'm talking about the calendar month of August here. One of the things that I think brought out the activity and generally, this aligns with our philosophy is thinking about diversification, whether that's where bots fit in your portfolio overall, kind of managing cash amounts around that, but then also managing different bots kind of against each other. And that's definitely something, we've been talking about in terms of developing some of the new bots and, the interplay between the existing bots, how to allocate them, in appropriate sizing and whatnot. And my two most active bots that I use are the King Condor and the Shorebo. For some of the larger accounts, I do like getting BenBot in there. That has its own kind of different return structure that's nice and kind of fits into the overall diversification question. But speaking specifically to the King Condor and the Shorebo, one of the things I like about the two of these is they're targeting, well, they're both credit opportunities. They're definitely targeting different ways the market moves. And, while they each individually saw, some drawdowns and took some hits, when one was getting beat, the other tended to win and offset that. So I think there were 5 occasions that they traded together. And in 4 out of 5 of those, they had opposite results, which is obviously a good experience. That's what you're looking for hey, if you're taking an L on this column, you want to see your other bots capturing a different side of that opportunity and winning. So, that element of diversification was definitely a theme in August. We continue to think about getting the right sizes for these accounts, for these, bots and where they fit into the overall portfolio. Thinking about how much cash you want to allocate to each of these, because while you can put on that credit spread for only $500 or $1,000 of risk, you want to make sure that you're backing that up with quite a bit more behind it, because there is some streakiness to these, and we do see drawdowns that last, and we see it's possible to flip heads 2 or 3 times in a row. I should say tails 2 or 3 times in a row. So yeah, diversification in general. And just thinking about appropriately sizing your bot position within your overall portfolio. This is definitely not something that I want my clients to be 100% allocated to. I know you guys feel the same way, but I just definitely put that out there to anyone managing the bots on their own too, is to think about where this fits in. And while August we saw the S&P up like 2%, something like that. If the bots are flat to down, the way that kind of balances against, some of the other typically long only holdings you have, I think it's worth thinking about, in that context too. And I definitely encourage those conversations with my clients, whether it's I'm managing just the bot component of their portfolio or kind of the bigger picture overall. So sizing is, one of the biggest and most important risk management decisions that you'll make regardless of what your trading opportunity is.
Mm-hmm. Yeah, you know what, Mark? We were having interesting conversations last week, you and I, about hey, should Shorebo trade on certain days where we're in a King Condor? And we went back and we looked at some data, and the data shows trade both of them separately, like trade both of them independent of what the other is doing. But I do believe there is a world, and we just got to put some more time and energy and research into it. I do believe there's a world where you can almost combine the 2 strategies into one, so that way they do work, in tandem with each other, and there would be certain days. Because I'll admit it too, first of all, if you're trading with bots, like the idea is, hey, just don't look. But when you are looking, and inevitably you are going to look, I'm always looking. There are certain days where I'm just like, man, I really don't want a Shorebo position on this on today. Like, especially when the King Condor is looking good, right? I want to take that W on the King Condor and not have to worry about that potentially getting, almost completely wiped out by a Shorebo loss. That's not fun.
And similarly, even if your Condor, or I should say, particularly if your Condor is getting tested on the short side, you don't want to always layer on that additional risk that, an early Shorebo indication might take that signal.
Yeah. Now, what we've seen historically and from live and back tested data, again, more times than not, turns out that you wind up in I'll just call it good scenario overall. But again, psychologically, as taking this day by day like any human would, sometimes it's tough. It's mentally straining. But again, that's why you got to kind of be hands off on it. That said, we are actively working on some longer term, I'll call it more investment style bots that we are going to be launching here in the near future. I'm very excited for this next round of bots. Like we had what we're calling it our next gen wave of bots, where we've got King Condor, Shorebo, BenBot, the updated Wheel bot, which that update should come through in the next couple of weeks here. But I'm excited for the investment generation of bots that we're going to be releasing next. Those are going to be pretty cool.
Couldn't agree more.
Yep.
Yeah, sorry, go ahead, Mark.
Nope. Nodding in strong agreement.
Yeah, and hard for me to deal off camera, so apologies, guys.
Just tell us if you're smiling and nodding, and then we'll take.
I am, yeah, smile and wave, boys. No, so that's the direction in which we want to head. I think Mark nails it. It's all really about how much portfolio exposure you want to have with these automated trading strategies. Some that are more investment long-term focused and others that are more so trading strategies that you can get some quick cash on, but there is going to be some drawdowns. So I know it's the same story, but there's a reason why we're repetitive about this stuff. It's really important. So excellent. Great update there. Excited for what's to come. Where do we head now, fellas? And if you'd like, I can just provide an update. I put an order out there for that Boeing position. I switched it up just a little bit.
1 second. I just want to know, Mark, was there anything else that you wanted to cover?
No, I think the real lesson from August and looking at results is diversification, cash management, getting positions sized right. Whether you're at Harvested, we're talking about that, or whether you're managing the bots on your own. Always worth thinking about and thinking about how your different investment sleeves are going to be interacting with each other. The diversification is the only free lunch out there in the market, but it also means you're always losing somewhere.
Yep. That's right. You got to get comfortable with the losses because part of the game.
They happen. Got to think macro. Excellent. Mark,
what's that trade look like, Dillon?
All right. So here's what it is. Here's what I did. So when I put it in, let me get it on screen here. All right. Got to remove Ben's, add mine. All right. So here's what I did. So in my Tradier account here, you guys will see, instead of opting for a potential $90 in credit, I went for $60, and instead of $5 wings, I did $250. So I grabbed the same strikes. All right, so 240 at the top, 217.5 at the bottom. But what I did was I limited my exposure from $500 down to $250, minus the premium I collect, which I'm looking to get 60 cents. So now we're talking a max loss scenario of $190. I feel a lot better about that as opposed to, earning $30 more. And now my max loss is what, $410 as opposed to $190 for an extra $30. So I dialed it down a little bit. If fate wants to get me into this position and fill this order, then we'll do it.
If it's not fate, it's going to be a fat finger because you put it in a market order, just so you know, just warning you. So when the market opens, you're going to fill, buddy.
Oh, look at that. You know what? Silly by me, almost expected, right? Hey, I don't hate it, actually. Maybe that is
fate.
Gotta have fate. So we'll see what it fills at. It was, that's obviously the mid price. So we'll see when it opens. Maybe I'll cancel that. Maybe I'll have another update before the show ends. We'll have to see. All right. I'm really crushing it today, guys. Let's move on.
All right, cool. So we're going to get into the Shorebo strategy. I think this is our 5th week of getting into Shorebo. Very interesting week we've got this week, and some comparisons to different back tests here. So we're going to be talking about stops and take profits. Now, we probably could have broke this out into 2 weeks, but I kind of liked the comparison because I wanted to take a look at what does just having stops look like, what does just having take profits look like, what does having both look like, And then what we've got currently live with Shorbo is we just get into the trade and we let the market do its thing. Again, psychologically, for a lot of people, if they know that that's all the bot has to do, it's kind of comforting. Like, just get me in my position, the market play out, do its thing. So what are the pros and cons of these stop losses, doing nothing, or taking profit? And we are, of course, in the do nothing category here. Stop losses, we're going to prevent those max loss scenarios. We could potentially have a smoother equity curve. We'll take a look at the backtest results in just a little bit. And as I meant, well, part of the psychological game here is kind of eased by the stop losses. If you know that you're not going to hit a max loss, because right now the max loss is, and we just implemented an update where the minimum credit you can get is $1 on a $5 wide. So the max loss theoretically is about $4. But if we had stop losses built in, and the back test that I ran, I included a 100% stop loss. So call it an average of $150 in credit collected. Stop loss would get you out at $150 loss. Cons are stops can cut winners. I think we've experienced that many times. Well, what would have been cut out many times, where price reverses later in the day and a loser turns into a winner. And I know from my just personally watching this trade, I know that stop losses would probably do more harm than good. And again, we'll see the data in just a second. And there's potential for a double loss if we have stop losses, which is obviously not great. And that's not a great scenario, although the double loss would potentially equate to what a single loss might be. It's still not fun to lose twice. Now, what happens when you do nothing? Well, you're going to, when you win, you're going to get that full credit potential. And that's always fun. I do know that some people trade Shorbo and they will manually exit. So sometimes it depends on your comfort level, right? Do what you want after the bot's done doing what it does. Do what you want to match your own investing goals and desires. I personally, I'll close some positions. Like I mentioned before, if Shorbo opens up and it's against my King Condor and I feel really good about the King Condor, I'm probably going to close the Shorbo position. Have I done that and been wrong before and I wind up kicking myself later? Yeah, absolutely. But it's going to happen from time to time. Yeah, there will be those days that I mentioned that if you are just buying and holding, or selling and holding in this case, you'll sell for $1. You're not going to get a hedge entry because there's a swing too late in the day. And then you're going to get a max loss of potentially $4 on those days. That is the worst possible outcome for the Shorbo strategies. You're going to lose that $4 in a day. And you got to have the stomach for it, right? If we're not stopping out, if we're not taking profit, we're just holding, probably better off not watching the charts. And then finally, we've got take profit. I'll do this. I'll usually wait till I'm in a take profit scenario if I am going to close early. But you'll lock in those gains. You have a higher win rate, frees up your buying power to put it into other strategies if that's working against your budget. But of course, you're not going to get that full credit at the end of the day. In the back test that I ran that we're going to show in just a minute, I took an 80% take profit. So we're letting a lot of value decline there, and we're going to buy back at just 80% of the total value that we sold for. But why don't we hop into some charts here, look at some data, unless Dillon, Mark, do you guys have any comments on stop losses, selling and holding, and taking profit here?
I'll say that managing the trades intra position is something that feels very tempting for me, but I always have to go back and look at the results of what the data shows, what our back tests are showing, because with these short-term positions, they'll zig and zag, they'll go against you and then they'll go for you, and I think you kind of have to look at something like that as I'm putting it out there and I've just got to let it run its course. At least that tends to be my take, because if I get involved, of course, this take profit and stop loss that are built into the logic, you want to let that operate. But a manual override, I think I would strongly caution against that temptation.
Yeah, I feel the same way. When Ben and I are talking with the rest of the team throughout the week and we're looking at these positions because we can't help ourselves. Ben is like, yeah, I took profit. I'm like, oh my God, that's killing me. But I end up letting it go. I try so hard to just let the bot do its thing myself. And I try not to even look at the stuff in the middle of the day. But excellent. All right. Yeah. I don't know if there's anything else here, but this was a great insight.
So let's take a look at how adding in these different parameters does for us. So we've got our Shorbo base, and I'll be flipping back and forth between the edits and the base every slide. So we'll get a good comparison here. So Shorbo base, the blue is SPX, the yellow is the bot. And this is from May 16th, 2022, and that's when daily expirations became available for XPX, to July 7th, which is of this year, which is just when we started this series. So what happens when we add a stop loss in? And the stop loss that I added in here was a 100% stop loss. So whatever our credit is, if the value of that credit doubles, we are stopping out. And this is what happens to the curve. So here's our base, here's stop loss, base, stop loss, base, stop loss. I mean, we're still winning, but we were pretty tied into SPX for the first, I'll call it 80% of this timeline. And it wasn't until recently that this strategy really broke free from the movement of SPX. So that was interesting to see. I mean, we obviously, the drawdown increase, we see the CAGR decrease, overall P&L decreasing. So just from looking at this, and again, this is 100% stop loss. We could experiment with more stop losses. However, that's the 100% mark is what I believe kind of makes the most sense. Because if you do have a double loss, which will happen, right? If you have stop losses in the Shorbo strategy, there will be a double loss scenario. So a double loss scenario here, I would say on average, at most is going to be like $300. If you go any higher, you might even get into some situations where you're going to lose more than what the maximum loss is from just selling and holding at $4. So that's adding in a stop loss. Now, what happens when you add in a take profit? Not too much changes. Our drawdown actually decreases slightly. Our CAGR decreases slightly, and our P&L decreases slightly. So really not much that changes here, and the equity curve looks relatively similar, in my opinion, at least. So if I were to say we were going to implement any change, if we had to, I'd say let's take profit. And the take profit again was 80% of our credit. That's where the take profit wound up being. Now, if we did that, this would have to be a day trading strategy. So you would have to have $25,000 in your account. However, Mark, I'm sure you're up to speed on FINRA and the announcement they made. I think it was back in July, actually, where they're considering moving that PDT cash threshold down from $25,000 to $2,000. Care to share any thoughts on that before we move into the next test?
Yeah, I don't know when exactly that's supposed to take effect, but I did see the same thing that they are, talking about bringing that down to 2,000. I mean, I think that makes a ton of sense. Obviously, eliminating it would have been my preference. I think, now we have an arbitrary level that's pretty darn low, but, it really just opens up a lot more room for experimentation. And, I always say that the best way to learn to trade is to get in there and trade. And do that with small size. Like, you don't need to start swinging 10 lots, even if you do have that kind of cash. But allowing for small strategies to learn the proper risk management tools, to take their profits on intraday trades, that's a good thing. And, I think not quite eliminating it, but drastically reducing it is a huge step forward for retail traders. And, it expands the number of strategies that they can, have in their toolkit.
Mm-hmm. I'm excited for this change. What I read, Mark, was like mid 2026, but the SEC still has to pass that. So I think it's sitting with the SEC currently. But maybe mid 2026 we can see that PDT rule change, which would be awesome. We would have so many different bots at PeakBot for everybody. So that is exciting. I would love to see that. All right, so let's look at the last version of the back test here. We saw the stop loss only, we saw the take profit only. So what happens if we combine both the stop loss and the take profit? This is what it looks like if we have both. And I mean, look at that. We could not, at the end of the day, we end up at the same place. So we're doing more harm than good, it seems, if we are intervening and we're stopping ourselves out, if we're taking profit. In fact, through a majority of this timeline, you would have been better off just buying the market and holding it. So I think that speaks to the simplicity of this strategy and the underlying theory of the opening range breakout, and just kind of letting it do its thing, letting the market drift in a certain direction after that opening range has been established. Of course, it's not perfect science. There will be losses. There have been losses. There will always be losses. But I mean, this is real data from every single day that the daily expirations were available on SPX since May 16th, 2022. So hard to argue with that. And again, here's our base compared to having both. I think the difference is clear. The decision-making process was easy after seeing this type of data. So our conclusion here is, after we enter, do nothing. Let it go. Let it go.
Love it. Keeping it simple. All right, very cool. Not that anybody cares, but zero success with my camera. So I don't know. Hopefully it'll be better soon for
might be doing the world a favor.
Yeah, we may. What else, gentlemen? I know we wanted to kind of try to give ourselves 20 minutes pre-bell. We're there. Any economic events to look out for? Ben, we recapped this on our Friday show. I think you said today was relatively quiet. Don't quote me on that. Yeah,
I can pull it back up. Awesome comment by Doug.
Yeah, that is an awesome comment.
Let's pull this up. So yes, today, not much going on today. Looks like some 9 o'clock data is already hit. We've got consumer inflation expectations at 11. Got some bill auctions, nothing much. Tomorrow, we've got non-farm payroll annual revision. And as I mentioned on Friday, I'm not sure how that's affected the market. I'm going to figure that out today. But we know that NFP days moved markets. We saw it move things on Friday. Luckily, it wasn't out of our favor. Actually, a lot happened on Friday. Friday was a roller coaster. So NFP annual revision, unsure how that typically moves the market, but on Wednesday we've got PPI, we've got a bond auction or 10-year note auction on Wednesday, we've got CPI on Thursday, 30-year bond auction on Thursday, and then on Friday we have that Michigan consumer sentiment report, which
we hate.
Boggle my mind on how that moves the market so much, but hey, it's my decision.
No, it's not. All right.
So, yeah, keep an eye out on inactivity schedules on your PeakBot app to see what bots are on and what bots are not. That way you know where your money's going.
Excellent. I think other than that, anybody who is trading the King Condor with PeakBot, here, let me just get this on stage quickly. Just a visual. All right, so we had a position entering on Friday, holding over the weekend. This orange line here is the entry at 3:15 on Friday. These are our strike prices. I forget the exact credit, Ben. Maybe you know off the top of your head, but I'm sure it was in the ballpark of $300. And trying to stay within these two blue lines here today for a W. So not going to have any opinion on it. Not going to do anything. Just going to say here it is. And best of luck to everybody.
Keep calm and Condor on.
Keep calm, Condor on. Excellent. All right, guys. What else here, if anything?
I think that just about does it.
Mark, anything from your side?
Happy trading to everyone out there.
Happy trading. I'll do the sign off camera just because I didn't prep anybody else for it, you know. But anyway, thank you so much for tuning in. Happy Monday to everybody. For any football fans out there that are not New York related teams, at least the New Jersey, New York team.
What a Bills game last night.
What a game.
Wow.
Yeah. So at least they're holding it up for New York because the Jets and the Giants certainly aren't doing it. Enjoy the rest of your week. Happy trading. We'll be back live Friday at noon for the Automation Station. Talk to you soon. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.